Okay, another monthly update on our ETF distributions. Forgot what I was doing here for a minute. So we have a couple of different buckets of money, and one of the buckets is in ETFs that we created a portfolio of. And originally that was going to be our supplemental retirement income bucket for monthly distributions and dividends. Started putting money into that probably a year and a half ago, kind of moving money around a little bit. The thought process was we would draw money from that to supplement our retirement and to provide maybe 2/3 of our retirement income that we need. And so far, we haven't touched any of it. And I'll explain that here in a minute. But in that fund, we have some cover call ETFs, BDCs. We might not have all these because I've swapped some things in and out, but closed end funds, CEFs, dividend ETFs, REITs, preferred stocks, and income funds. And we'll get to that in a second. But like I like to say is subscribe. And this is not financial advice. Some people think this is bad advice. Some people hate cover calls, and you just say cover call to them, and they cringe, and then they go to social media, then they type stuff. They hate it. Well, that's okay. So let's get looking at some things here real quick. Okay, before we go too far, so especially when it comes to options and some different things, we have some different buckets of money, and people are like, I get feedback saying, you shouldn't do this, you shouldn't do that. Well, it's okay. And this is our investment buckets. It doesn't include any real estate or anything like that. But the biggest thing here is our growth funds. And that consists of SPY, SPY, QQQ, VTI, SPMO, and I think I have a little QQQM in there. And as far as growth, I think those are it for the growth funds. And then our other buckets here, we have our income funds. So this is what we're going to go over today, is the money we're getting from our income funds. And this is this orange piece of pie here. And that's about 25% of our total portfolio. And then the other kind of buckets of money we have our cash fund, which is basically money gets kind of like filtered through our income funds and our option fund. And each month I have money going to our cash fund. And that's our day-to-day fund. Our emergency fund is also kind of in there. We don't really have an emergency fund. We have like 2 years of cash, and money goes in there each month, and it just keeps going in there. And we don't really have an emergency fund. If we need to spend money on something, we just spend it out of our cash fund, and it replenishes itself over time. Now, if we need to, we can take more money out of our income fund or maybe our option fund. So I haven't talked about our option fund. So I post a weekly video on the money I make from options. So this was kind of an unexpected, I won't say surprise, or an unexpected thing that happened when I retired. So I've always kind of did options for several years, probably got more involved with it during COVID when I was working from home, and I was still working my full-time job. But then I had some extra time during the day, so I would jump in and, do some cash secured puts or cover calls or whatever. And I think I started out with like Oracle and Intel. I think I own a couple hundred shares of stock of each maybe. And then I'd write cover calls on those and just a little bit. And then also maybe 100 shares of, let's say, QQQ, I might write a cover call on that. I got a 0.10 delta or something. So just kind of like dabbled in it. And then I realized I was making, like $3,000 a month doing that, just kind of dabbling. So then I decided when I retired, maybe instead of drawing money from those income funds right away, I can draw some money from that option income for a while until I decided I wanted to start drawing money from the income funds. In the meantime, the income funds, the money was coming in, and I was just kind of like reinvesting it and buying more shares of different things. Let's say like QQQI or SPY, things like that. So that was kind of the plan. And that plan's been kind of working. So really, as of now, I haven't taken any money out of these income funds. So the money is being produced, and I'm just kind of buying more shares of things. Now, we did take some of the income funds and sold off some of them and put money back into the growth funds. So maybe 5-6 months ago, this bucket here was 35%, and the growth bucket over here wasn't 55%, it was like maybe 45%. And actually, the income option bucket here, where it's 10%, that might have been like 5% or less. But as I've been doing more and more options, two things have happening. That option income bucket has grown, and I've put a little bit more money in that because it's been doing quite well. And like I said, I got other videos that show what we're doing in that. We're making $10,000 a month minimum from our option income. So let's get into what we're doing with our distributions from our income funds for this video. All right, before we go too far, let's jump into Blossom. I don't promote Blossom. I don't have any opinion on it. I do pay for the paid version of Blossom. There's an affiliate link. I don't give it to people. If you want to sign up for Blossom, just go and sign up. I don't like promoting things and getting paid for it. But what I do like about Blossom, you can see what other investors are investing in and seeing what is going on. I wish there were more option traders on Blossom, but there's not. And it is social media in a way, and there are like know-it-alls and kind of troublemakers and people who comment like, oh, you're doing this wrong, you're doing that wrong. Anyhow, the reason why I like it, I can do something here where I can see like a pie chart of each thing that I own. If I click on see all stocks here, you can see how my portfolio is kind of divvied up. This would include the growth funds bucket and the income funds bucket. So the cover calls and those types of things. So you see SPY right here is our largest holding in QQQ and SPMO. So these three are growth here. And it looks like if I add up these totals, it's like 48% these right here. And then you got VTI down here. So that's another 5%. So that's like 50 some percent. And then somewhere in here, there's QQQM. Down here, it's like 1%. So it's about 55%, give or take a little bit. I didn't do exact math, but it's close. And then our income funds, our cover call funds, and our alternative funds are also listed here. So QQQI being the largest, it's like 7%. Then SPY is 4%. So as you can tell by the percentages, those are probably my favorite. And then GPIQ is 3.5%. TDAC is 3.4%. MAGY is almost 2%, which is more than what I actually thought it was. But I guess that does make sense because I have MAGY and QDTE in a Robinhood account that I'm doing this experiment on. So that makes sense. So TDAX is a new one that probably wasn't in here last month. It's from Tap Alpha, is a leveraged version of TDAX. It uses 30% leverage to get a little bit better return. So we'll see how that performs. And I put some money into that. And then basically what this is just showing is what I have and what percent of my total portfolio that it is as far as the growth in income funds. This doesn't include our cash accounts or the option fund. And I'll scroll down here slowly in case anybody wants to see what our holdings are, what percentages we have. Chippy, CHPY, is a newer fund. I know it's a yield max fund, and people freak out and are triggered by the word yield max. If you don't believe me, if you don't know what yield max is, just go to YouTube and look at yield max, and you'll see all the people who are triggered by it enough that they do videos on it. And let's just scroll down here. You can pause this and look at the percentages if you want. So one other quick thing I'm going to look at real quick is we'll click on this. So this is totalrealreturns.com. And you got to manually put your tickers in here. And I have a couple favorites with my tickers. I have like 10 per page. So these are the different tickers that I'm looking at here. And what I like to do is pop in here every so often and compare how my returns are doing compared to the SPY and QQQ. Those are my benchmarks. So this is the year-to-date return so far. And you can see these are not in any particular order, except it's my larger of my top 10 holdings in my income funds. Okay, so although I have SPY and QQQ in here, but that's for comparing. So you can see GPIQ for the year so far for 1 month, it is up 1.45% compared to QQQ, which is up 1%, and SPY. And JEPQ is up 2%. QDevo is right about even. KQQQ, I'm very disappointed in that. It's down 0.22%, but it is not based totally on QQQ. It's based mainly on the tech companies in QQQ. And QQQ also contains like financial institutions and some different things like that, which KQQQ does not have. So when tech companies in general are not doing well, this will perform worse than QQQ. So I hope that explains that. And then you have TDAC and TSPY. So you can see actually TSPY is outperforming TDAC so far for 1 month. Then I have blocks, which I have a little bit of money. I got money in there for the distributions, about 35% per year. Then GPIX, and this one here is a NEOS, NEOS real estate fund. That's up 2%. And the IAUI is another NEOS fund that's based on gold. And then this is my second team, let's call it. This is the funds 11 through 20 approximately, not in any particular order, just here. So once again, I got SPY and QQQ on here so you can compare. You can only add like 12 tickers to each page and then you're limited. That's why I got separate pages. Otherwise, I would have put them all in one page. So you have the IAUI, which we already saw. I need to delete that. Then we have FEPI, which is underperforming so far this year, but then you have IDEVO, which is up 10% in 1 month. Then you have this Omaha, which is the Berkshire Hathaway Select 15, and it's been kind of underperforming, but it pays a 15% yield per year, so that's why that's in there. Now, if I would have checked this one here actually last week, this number might have been higher. So this KSLV is up about 120% since I bought into it, but it went down like 25% on Friday. QQQT is up 0.7%. Then this NVIDIA Rex shares is up about 4%. So these are total returns, not distributions. And I should hurry up so we can get to the good stuff. Then we have the Robinhood weekly pay. Total return is now 14%. And then the gold curve fund is up 14%. So this is only in 30 days. And the last one here, I call this my alternatives. They're not really covered call funds. They're like closed-end funds, preferred stocks, some different things that pay monthly distribution. But once again, I got SPY and QQQ in here to compare. So we have STK, which is a closed-end fund right here. Then we have CSWC, Southwest Corporation. You can see the percentages of these. They're all performing quite well compared to the S&P 500 so far. And then this ARCC is lacking just a little bit. But you can see the rest of them are doing quite well. And most of these pay a yearly return ranging maybe from 8 to 12 to 15%. So these are kind of like just trustworthy funds that are just kind of sitting there doing their thing. So this is a utility fund. And I got these to like diversify a little bit. And I may be adding more money to these. So as the income comes in from these other funds and I'm not using it, I'll probably like just add to these funds here and build up these positions. So now let's jump into dollar amounts here to keep anybody from waiting. If you want to like quit the video now and give up on me. So for the month, for my income funds, we received $89.17. Now I think the thumbnail might say over $10,000, and let me explain that here in a minute. Okay, I jumped over to this other spreadsheet. So this is a Robinhood account we got, and it's an experiment I'm doing. Right, we sold a house, we invested the money in some income ETFs, and we're collecting distributions, and we're using a little bit of margin. We're paying interest on the margin here. And for January, we collected $4,100 in distributions, basically. And we did have a little bit of option income in here too. It's a totally different experiment, but I include the total distribution when I'm calculating how much we actually received. So getting back to this, and we'll go through this quickly. I sorted this by symbol because, for example, we get weekly distribution from blocks, and I don't want to talk about blocks 5 times, so we talk about it one time. I highlight these here. You can see the average down here, but you can see it's about $500 for the month. You can see the ASGI paid out 2 distributions, and I'm not exactly sure why. Maybe because they had extra money at the end of the year that they had to pay out, but I collected $200 for the month. These couple curve funds here, the Apple curve and the Amazon total paid out about $95 or so. I'm kind of just throwing out average numbers or estimates. The Chippy I bought new just this past month, and the 2 distributions I got were almost $100. This pays weekly, so going forward, I expect this to be about $200 a month. Now, some of these a little bit higher volatile, people might say riskier ETFs, I got some of those, and those are just to like juice up monthly distributions a little bit. And what I hope is that the NAV, the net asset value, will stay at least even or increase a little bit. In reality, it probably goes down a little bit. But I got these because they pay a higher yield, and I just want to see how they perform. The Chippy's been doing quite well. It's been holding its NAV. So I can't remember what I sold out of, but then I put the money into this one. And we'll just look at some of the bigger ones here. So this one here is a new one I just bought into, DRKY. I can't remember what I sold to get into this one, but I paid $110 for the month. The FEPI, which is down, total return was down. It paid $238. The GIAX is a fund that we have, and I actually just sold out of that. I had it once before. It underperformed. They redid some stuff, and they start paying weekly, and it's still underperforming. And so I decided to say goodbye to it for now and maybe revisit it once they get their strategy together, I'll call it. And then we have the Curve Google Fund, which pays a monthly distribution. That was $56. PIQ is one of my top 5 favorites. We got it in 2 separate accounts, so we collected almost $500 total for the month. And then GIPX is the S&P 500 version of GPIQ, and that paid about $100. This Robinhood weekly pay is down like 15% for the year. It paid out $313 in distributions, so it pays a high distribution, but the NAV has been declining. So we'll watch that really close and see how that total return is over the next couple months. We might have to bail out of that one. And then this Neil's Gold Fund, $121. iDevo doesn't pay a huge distribution, but the total return is always good. And then this is the the Neil's Real Estate Fund. Total, it paid out about $250. We have the JEPQ, which is a very popular fund, paid out $172. And then we have the Curve Gold Fund, paid out like $60. We have the Curve KQQQ, which I was talking about being disappointed in, but it did pay out $246. And then we have the Curve Silver Fund, which is like more than doubled for me. They paid out $150. MAGY, which I have in one of my accounts, total for the month paid out $121. That is down a little bit, the total return so far this year. And then we have Meta weekly pay. That has paid $125 for the month. And then we have a couple other Curve funds. One's based on Microsoft, one's based on Netflix, $81 combined. And this NVIDIA Rex Shares weekly fund is paid out $220 for the month. That Omaha Berkshire Hathaway fund I was talking about is paid out $115. I think I sold out of that one actually, and I think that's when I sold out of and invested the money in DRKY fund here. And then here we have the Palantir weekly pay, $211. Then we have QDTE here, paid out $361 total. We have QDevo, which is related to iDevo, same company. This one pays out a bigger distribution, but the total return is a little bit less. Then we have QQQI, which is one of my favorites. And I'll say in the past, it's been my favorite. But just because I have favorites, just like my kids, that doesn't mean that somebody else can't step in and become the favorite. So that's about $800 for the month in distributions. T, $155. And I was just kidding about my kids, by the way. Don't be texting them. And then we have money market here. So we have $700 in basically money market funds. So the reason why that's kind of high is because I do have this money sitting in Fidelity, and I'm earning interest on that. And this is money I'm using to write cash secured puts. So I'm kind of double dipping on this money. Well, there's about $150,000 cash sitting in that account. So I'm drawing a decent amount each month on the interest, but then I'm using that money for collateral to generate the income from the option trading, which is like $10,000 a month. So I'm doing okay with that plan. So that's why I got so much money in money market fund here. Then SPY, SPY, is typically not considered like a dividend great paying fund, but we do have money in SPY, so that does add up quite a bit. So we earn almost $1,000 from SPY. And the SPY is one of my favorite income producing funds. We got about $400 from there. And then TDAC 225 and TDAX, which is a newer fund that I bought into. Now that pays weekly, and I've only received 2 distributions from that so far. And we'll see how that goes in the future. And then we have T-SPY, which is monthly, kind of the S&P 500 version of the TDAC here. And then we have this utility fund here that was up pretty good that we looked at in the totalreturns.com. It might not pay a great monthly distribution, but the total return has been pretty good. And then we have XPay down here. So my XPay will go down about 50% because I took half the money out of XPay and I put it into TDAX with the X here. So I took this money and divided it between these 2 funds here, trying to diversify just a little bit. So for the total this is our Fidelity funds, this here was $8,900. And like I said, over in the other fund, in our Robinhood account, we received around 4,000 in distributions. If you take about the 9,000 plus the 4,000, so it's about 13,000 in distributions for the month of January. So since we're newly retired, we're still trying to figure out what's the best places to put our money. And to be honest, we don't need all this money to live off of. And a lot of people, get back to this sheet, they look at this growth here and they say somebody your age should not be putting all this money into growth. It's dangerous and it's reckless and you're crazy. To be honest, this money and this growth, like we might not ever touch it. So it might just be there forever. So I had somebody say, you're investing like somebody who's in their 30s, talking about this bucket of money here. And I thought about it for a minute, and my kids are in their 30s. And I'm thinking to myself, like, this is probably money that will go to them or go to charity or something. And so my response was, yeah, I investing like in my 30s because this money is probably being invested for people who are in their 30s because I don't think we'll ever touch it. So that answered that. So anyhow, that kind of wraps it up. I get a lot of hate comments on these videos here. Like people are saying like, how about NAV erosion and all this other stuff? But the total returns, that's why I kind of threw that into this video. Yeah, some of the funds are down, total return, but most of them are up. And not only are most of them up, they're up higher than the S&P 500 or QQQs. Anyhow, whenever there's a comment, I don't go back and forth with people. If it's outrageous, I just ignore it. Give it a thumbs up. I like it. But if it's a legitimate question, I'll respond with a good answer. There's usually a good answer for everything I do. Nobody really watches your money like you, so I don't use any type of financial advisor or anything. I do everything myself, and I've done okay. And if I want advice from somebody, I'll ask advice. And I watch other people on YouTube that I have grown to trust and see what they do. Join Blossom to watch what other people are investing in and communicate with others that seem to have a good look on things and a lot of do-it-yourself investors. Always doing research, always learning. Is this a perfect setup? No. Is it perfect for me? Maybe. So I'm not complaining. We're doing well. Anyhow, don't forget to like this. And remember, this is not really advice. It could be bad advice. And remember to subscribe, and we'll see you in the next video.